Welcome to the Trading Lounge and the Day Ahead Report, and I just want to say that we're going to be working with Halifax, and the reason for that is that we're finding a lot of traders don't have the time to place trades, so Halifax have stepped in and said that they will trade the robo method on behalf of any of our clients. So that service is there, and you can certainly just contact us at the Trading Lounge. We'll put you in contact with the right people at Halifax if that's something that may interest you. Okay, looking at the markets here and looking at the Dow Jones here, and we were, as you know, tracking this wave count down through here in little 5 waves, and it matched up quite nicely with the 12,500. So we expected a bounce to come in through there, and that's what we're seeing at the moment. And the catalyst is the solving of the fiscal cliff. And yeah, so from a technical point of view, or Elliott Wave point of view, and trading levels point of view, there's a few steps that we need to get past. And one of them for the trading levels is that the 13,000 here is the closest largest number. So any move up through here, we could see this as being a corrective rally and a corrective move, or we can see it as an impulse move and making new highs above here. So I like to sort of stay with the evidence, and that's what we should stay with. The bias is for new highs to be made, but like I said, we need to stay with the evidence. And in gathering the evidence, some of this here, the 12,800, it's a minor level 8, and also a profit-taking number, and it will be profit-taking because there's this block of supply here, which is basically the sellers and the volume that's here. So we'll see weakness come into the 12.8 there. If we see the 12.8 as support, then that would give us some confidence to move up and retest the next level, which we would also expect resistance here as well. So it's going to be quite a tiring time at the 12.8 and also the 13,000 if it moves to that degree up there. So what we noticed here is that in the first little section here that we had 5 waves here. So if we get 5 waves, then we're going to get another 5 waves. And if I just outline this on a chart here, just so you understand, is that currently the bounce that we've got is in 3 waves like this, okay? So that means that in the beginning here, in the first little section, we had 5 waves here. And in Elliott terms, if we get 5 waves here, that means that we'll get another 5 over here. And that much we can be pretty much assured of, and that's the confidence that we can trade within from that point. Now, a 3-wave structure is a corrective structure, and a 5-wave structure is an impulse wave as such. So what we've got to kind of work out is we've got to work out, are we going to get this 3 waves, or are we going to get this 5-wave structure here? So as I mentioned, if we get the first 5 in here, like this one here, then we know we'll get this one here. So we're at this point just in here at the moment. So that means that that if it's just going to be 3 waves, well, then we can fail from that point, and we'll start seeing further downside to come into play here. So that's a real possibility. So what we need to do is we need to get past this little structure in here, this little 4th wave here, the 1, 2, 3, 4 here. And once we're past that and we get this 5th wave come in through here, then that becomes interesting, because as we've got 5 waves here in this first little thing, then we can be assured to get 5 waves over here. So if we get this larger 5-wave structure, if this large 3-wave structure that we've got actually turns into a 5-wave structure, then what we'll get is we'll get a 3-wave counter trend from here, like that, and then we will get another 5 waves to the upside here. Right, so that much, so it just means that we know where we are as such. So we just need to get past this little structure in here. Within this 3rd wave through here, there will be 5 waves in here, and different markets they even though they all the markets are up, they can be in slightly different wave counts in their own little ways, own little structures. So but anyway, that's our dilemma. We need to work out this. Our bias is further to the upside, but I'm saying that we don't have the evidence for that just yet. If we get 5 waves, nice clean 5 waves here, then we'll have that that evidence come into play there. So just bearing that in mind. So this move up through here, that's why it's labelled here as an A wave or wave 1 here, B wave or wave 2 here, and the third wave moving up through here, or it could be the C wave. So it can fail at the 12.8 there and then roll over to the downside. So we need to work through this here, and it's not like we're going to miss anything either, because if that moves up there, it's not going to go far. It's going to be vibrating around that 12.8 there. So. And this will be the same for the S&P 500 as well. This is the Dow Jones again. It's on a 2-minute chart here, and what you can see here is that the market's been quite strong through here. Nice third wave up through here, a little fourth wave in here, and a fifth wave here. So we're starting to see the market slow down into here. So we're starting to see it slow down when we're talking about 12,800 up here. We've also got to start bringing in the smaller levels here, and the first smaller level is Group 2 here, which is 65, 72 and 80. And this 72 is important here because it's double 72. So when we get double 72 or 272 together, then it becomes a strong number, and we can see it playing out through here as well. So we see this as a corrective move here. Once it's complete, we'll see further upside, but it is slowing. Do you know what I mean? It's had its beginning, its middle, and its end. This sequence here. So there will be a slowing into the 12.8 through there, and this is the same for the S&P 500 as well. Slightly different. It will be working with the 1380 here, and then of course the 14 is its larger number up here, as 13,000 is to the Dow Jones. So we always have a bias in terms of the level. So the closest largest number, and we need to be on the right side of that. So even this is a retest of the supply here. If this found support here, then we would be more confident, more positive through that. And that would also, if that moved up to there, that would be displaying 5 waves at that stage as well. And this is very much the same for the European markets as well. That's just come back to the bigger picture here for this. So with the DAX here, for example, is that you can see that we've got that move up and then back and then the strong move up. So it is like a third wave. So our bias is to the upside. So the 1, the 2, the 3, the 4 and the 5. The 72 here is its number here that would be looking for 5 waves up to there. The 1, 2, 3, 4 and 5, then an A and a B and a C correction, and then further up from that point. But as it stands at the moment, we've only got the that can be counted as an A and a B and a C. Probably not the case, because it's got this strong wave here. It's got the personality of a third wave rather than a corrective wave for a wave C. So if you're long in the DAX, then stay long. Same with the UK market as well. If I just go into the bigger picture here first, we can see that we've got this strong move here, which is much more like a third wave rather than a C wave. So here we've got up for 1 and back for 2, and then we've got the third wave, which would be the 1, the 2, the 3, the 4. It's not finished here. The 5 for the top of the third, and then the 4th, and then the 5th moving a little bit further up through there. But as all trends and all corrections, they've got a beginning, a middle, and an end. So you've got the building process in the beginning. You've got the strong part in the center here, which brings in the volume, and then the end. So the beginning, the middle, and the end. I don't have, this is the Dow Jones here. I just want to point this out before I forgot about this. But we could see from yesterday that we've got the strong volume through here. So what we want to see to the upside here is we want to see, it doesn't have last night's information in here, it's just an end of day program. yes, we want to see increasing volume to the upside. If we see this continually moving up through here and we're getting lower volume every day through here, then we know that it's going to fold back on us, and we need to be aware of that. So yeah, okay. So, and the Australian market is the same as well. We were looking for some support into the 4-3 here, and looking for a move up through here. So a couple of things here is that it does seem to be building quite nicely as an impulse wave through here, which will give us the direction, give us further direction. We know that the 4,400 here for the cash today will be the resistance point for that. So we'll see this move up through here further. So from even this point here, we can see up for 1, back for 2, little third wave up here that's not finished, and there'll be a fourth and a fifth wave up through here. So we will see this climb higher through here, and we'll see it come into group 1 through here, but it should stay within subgroup 1 here today. But if you are long and thinking of going long, that's fine. You can go long. What we're looking for eventually is support on top of the 44.30 here, and while the price is completing its first leg up through here, any correction in here would be in the range here. So the 44 would be the balance line of the correction, and the 10, 20 and 30, its job, group 1, is to hold the price to the closest largest number, which will be the 44 here, and the group 2 here will eventually become the support here, the 65, 72 and the 80. So group 2 and group 1 would be the range of any corrective activity within this area through here. As long as the price really stays above the 43.50 here, then the market is positive to the upside. So good. Alrighty, let's have a look at the commodities. Okay, starting with gold here. So gold, as you know, we were counting this 5-wave structure to the upside through here, for wave 1 to the top here, and then we're looking for a 50-60% retracement level coming back in. Well, we figured that it may even come below down to the 1695. It just didn't make it that low, but we're pretty much on track with everything. So wave 2 is in place through here. For the people that understand the levels, you'd be long above the 1720 there. So you can continue to go long. If this is wave 1 here, the length of this distance here as wave 1 here, then wave 3 is going to be that distance plus another 60% on top of that as well. So we can see it moving further up through here. So just trading normal through here, you'll be looking for support on the 1730 through there, and we'll be looking to go to the further upside. We won't put a target in there just yet because it could go for quite some time up to the upside here. So the first step, though, is to there will likely be a corrective pattern across the 1730 there in 3 waves across. It may come back down to the 1720 and test that, but the main point is that it's long to the upside there, and that would be the same for silver on the 33 there now as well. That's where we are. So we were looking, as I mentioned before, we had the 5 waves up there, and this was coming up through here, and we're looking for a move back. Obviously, that's the 3-wave swing coming to the back down to the downside, but I couldn't give you a clear indication on that wave count, but we knew that it would come back in and test around this area in line with gold and then move up from there. So yeah, look, what can I say? You know, it's got further to go to the upside, but it certainly can, fail to find support on top of Group 1 there, the 33.30, and then, swing back into here, across here, down here, and 3 swings, and then move to the upside. So just be mindful of that and just build positions in at every certain length through here, different prices, but also use the levels in terms of working out, does 33, is it the tested support? And if so, then you can move in from that point. So at the moment, it's not tested through here. Yes, it's still moving up. And what we normally do here, if it doesn't test it back into the 33, if it finds support on the 33.30, then we would put the position in long from there, because we don't want to miss the trade as such. We need to have a set of guidelines to get in. The copper market, the base metals, the important thing here, I guess, is that the price has moved above the midpoint here, the 350 in this case, so that automatically makes it positive as well. When you're using, it does seem quite a strong move through here, and what we normally do with the to work things out is that if we use a trend channel through here and we get a nice clean strong breakthrough here, that normally indicates the third wave through here. Okay, so yeah, so we'll track that to the upside. What I'm not sure about here so far is that is the actual structure across here to the upside, how it counts as a part of a larger impulse structure to the upside. So we'll just leave that for the time being, and I'll just have a look at some other markets to see if I can get a general consensus on how that should count out through there. If anybody's got any ideas, then please send them through. Okay, so let's have a look at the currencies, and especially the US dollar index as it's dropped below the 81, which was the trigger for the other markets to head to the upside. Okay, starting with the US dollar index here, and here's a daily chart here, and this is pretty much what we're looking for here. We're looking for an A and a B and a C wave up through here to make a larger B, and we'll see this move to the downside. Now, yes, we have seen this struggling through here as it's been moving to the upside through here, and we're looking for a top, and now we've seen it move down through the 81. But we haven't seen it at this stage. It hasn't rejected the 81. You know, it hasn't retested it as such. It hasn't sort of moved back up and failed. You know what I mean? And that's the process that we need to see before we can call it in as such. So we need to see that doesn't have to come down that far, but just drawing the picture there, it has to come back up and move through it, and then go back up and fail from that point and then roll over. That would be the rejection. That's what we're looking for. That would give stocks the impulse wave to the upside. So that hasn't occurred yet, and we just need to be mindful, because when we're looking at the Dow Jones and the S&P 500, as I mentioned, we've only got 3 waves up. We don't have 5 waves up just yet. So we don't have that confirmation in there. It could be quite possible that we could see this market move up for one more high here, and the way that would occur would be in this here. So this is on the 4-hour chart here, is just looking at the C wave coming up through here. So we've got all of our little ABCs through here, but we've got possibly the 1, the 2, the 3, the 4, and the 5. One more to go through here. So until it rejects that, I'm just exploring possibilities with this. So, you know, until it rejects the 81 here and pushes further down, and wave 4s, I wouldn't worry too much about this trend line here either, because wave 4s always break the trend lines, you know, so I wouldn't concern too much about that, but would see some sort of bounce there anyway. But we want to see it come, you know, we want to see it really take the top of this low out through here. So we want to see it reject the 81 and move down. So just be aware of that. I mean, if this starts working across here sideways and doesn't let the 81 go, well, then it's going to be a positive aspect. And, you know, if this does move up through there, well, it's going to send all those other markets back to the downside. So it is a bit of a catalyst on the other side of the fence to have a look at, and be mindful of that. So if we have a look at the euro, for instance, we were looking for the 4-hour chart. We're looking for the low to come in, and we're looking for a positive structure to the upside, and back for 2 here. And then moving further up. Now everything's been moving on track. We nailed the low. We're looking at the structure unfolding, but at the same time we have only got the 3 waves to the upside. So it can be counted as an A and a B and a C wave up through to this point here as well. So there's a while to go before we can actually give a concrete evidence that we will be moving higher. Even though that is our bias, we don't have that evidence there. But we still have to make trading decisions along the way, and that's where the trading levels come in, because they do offer us support and resistance based off price and volume, and that's as good as it gets. So that said, then we're looking for the 128 here. So the 128 as support. Now, when a market comes to a level like this, it can really only do two things if it's going to be sticking around. One is the overshoot pattern, and one is the classic pattern. So that's what we can expect across here. Expect some sort of, we've got that on a smaller thing here, so just bring this in through here. So we'll be looking for a we're looking for some type of correction into the 128 here, and we could pretty much buy off a pullback through here. But look, it's much nicer and safer if the market comes down and breaks through the price here, and breaks down and comes back through and then climbs back up over it. That's when you can go long. If it doesn't break through here and it starts moving up through here, then if it's got a nice tested support on the 128.10, fine, then get a small position there and then glean another one off the 20 here and then look for support on top of the 30, move that way. That would be the way to go. But it's just nice if it just breaks down through here and then gets support, because then it's tested lower, and that's what trends are, aren't they? I mean, as that's moving up there, all it's doing all the time is testing. So you want to have a test first. And I mean, if I'd seen this here, if I was here at the time and I'd seen this corrective pattern through here and then find support on my favorite number here, 72, then I'd be long from that point. I'd be getting out at this point here. But so that break lower, then finding support is what you're looking for there, which is pretty much like the Australian dollar too at 104 now. So with the Australian dollar, here's just a 5-minute chart coming in from this particular low through here, being above the 103.20 was the positive aspect for being long or being on that side of the fence. But it does appear that we've got like a little 5-wave structure up through here. We've got the last little 5, 1, 2, 3, 4, 5 coming in through here. So we should see a larger correction unfold through here, and then continue to move to the upside through there. And with copper being above the 350, the midpoint there, really helps it, strengthens it there. We do need to see a bounce. We do need to see some volume come in on the Shanghai market, and it's not there as yet. Not seeing any volume come into that particular market just yet. I'm just having another look here on the comp. We've seen the price move up yesterday, but it wasn't really moving up on strong volume, but just moving up on the psychological major trading level there, the 2000. So we're not seeing the volume come into that just yet. And this structure that we're looking at here does look a bit bearish in terms of a possible 5-wave pattern down through here. You could say it was in 3-wave through here, but it's taken at the bottom through here. So even if there was a 5-wave structure coming up through here as such, then we would know that it would be corrective, because this would be an A wave, a B wave to here, a C wave to there, and then it would fold down from there. So we don't particularly want to see that, because that just brings in a larger bearish pattern. But to see this come down at a consolidation within group 1 here, 10, 20 and 30, then a little move down through to here, that could help us with a low in the markets there, because we want to see, if we're going to be seeing the ASX cash push up much higher and all the other markets push higher as well, it'd be nice to see this complete this structure down through here to give us the 5 waves as an ending pattern and then move to the upside. But we're not seeing any volume come in through there just yet for a driver at this stage here. But we could see the some of the other Asian markets push higher as well. Like the Nikkei has been working into a very large triangle, should break to the upside. So there is some support in that area there. So, but look, main point here, trend is up. There will be some type of correction through here, so you need to give that room to move. And if it was going to pull back, it would be into the 103.72 here, the last area where the most volume was turned over through here as your support there. Alrighty, well that's it. So yep. So good morning and good luck.